Chapter 30. This is going to be covering the Certificate of Liability Insurance for dispatchers. I mean, this is explained for dispatchers, right? And when you're looking at this, my first thought when I first started dealing with it was, a COI, Certificate of Insurance or Certification of Insurance. So it is what this is, but this is the type of insurance. So, and this liability insurance actually covers most of the parts on a truck. And all right, so let's cover them. Okay, a Certificate of Liability Insurance, a CLI, is a critical document for dispatchers in the logistics and transportation industry. It serves as proof that a dispatcher or carrier has sufficient insurance coverage, safeguarding both the dispatcher and their clients from potential financial liabilities arising from accidents or damages. This chapter will cover the purpose and key components of a CLI, its importance, the pros and cons, best practices for managing the document, and resources for obtaining information about liability insurance. The purpose of a Certificate of Liability Insurance. The CLI is not just a piece of paper. It represents a foundational element of trust and legal compliance in the transportation industry. The document confirms that the dispatcher or carrier has the necessary insurance coverage to operate legally and protect against financial loss due to accidents or damages. Now, when you're looking at it, it's saying the dispatcher. It ain't. I mean, now if you're the dispatcher and you own the MC, right? Then yeah, it covers you. But in the essence of what you're doing, you're a dispatch service or a dispatcher for a carrier, right? So really don't need no insurance to cover you for the most part because it's covering that equipment, it's covering that load, it's covering that truck, that trailer, and all that. You're not doing none of that. You're sitting in an office working from a computer, but you do have to make sure that all these components are there in the certificate of insurance because that's what's needed, right? So let's go over them and clarify this. All right, so this is the different pieces that the Certificate of Liability Insurance for a semi-truck typically covers, and this is all the key areas of liability insurance, depending on the specific policies held by the trucking company. Here's a breakdown of the CLI. It says auto liability insurance. Okay, this is going to be for body injury liability, property damage liability. So the bodily covers injuries to other people in an accident where the truck driver is at fault when he's at fault, and they're always going to try to prove he's at fault. Property damage liability, this covers another person's property, such as vehicles or infrastructure, in other words, hitting somebody's building or something like that. Cargo insurance, it protects against loss and damage, on the cargo. This is particularly important for freight that is high value or sensitive. Physical damage insurance, so it covers damage to the truck and trailer due to accidents, theft, vandalism, and natural disasters. This can include collisions and comprehensive coverage. Bobtail insurance, this provides cover for your truck when it's being driven without a trailer, when the trailer is not under when the trailer is not under a dispatch. So from what I got, that means if you're dispatch and you're a bobtail, apparently they're trying to say, I guess that will be okay, you're considered you're under load because you're headed for that. So that means they're going to be looking at the ELDs and everything. Insurance is a powerful mafia as far as I'm concerned. So also it covers the uninsured or underinsured motorist insurance. So this offers protection in the event of an accident with a driver who has insufficient or no insurance coverage at all. General liability insurance covers third-party claims for bodily injury and property damage that may occur as a result of the trucking business operations, not directly related to driving the truck. So, and as far as I understand, this could be like somebody suing for maybe for workman's comp or some kind of insurance, like falling off your truck, whatever it might be, because there's a lot of high parts, and most people don't know to keep 3 points of contact, for example. Workman's compensation insurance. So this provides coverage for employees who are injured while performing their job duties. This may not be included in a CII, but it is often required for trucking companies with employees. It's actually law now. Everybody has to have the workman's comp. I think it's like $40 a week. I think that's what they're paying. Summary, the CLI serves as proof that the trucking company has necessary insurance coverage to operate legally and protect against various liabilities. Is crucial for securing contracts and maintain compliance with industry regulations. Always check with your insurance provider for specific coverage details and requirements. So in other words, without the insurance, you can't pull no freight to begin with. So you got to have these, even though it's under one CLI, each part of these is going to be covered, and it depends on what you're needing, the value of the loads, depends on what the insurance is actually going to turn out to look like as far as your payments. Okay, so basically I covered that in that last section, but it still wants to go over the key functions of that policy. So it's just giving you the CLIs, giving you proof of the coverage. It's the legal requirement because it is required by law. Risk mitigation in case something happens. And where do you find it? Now this information is typically obtained from the insurance provider, which issues the CLI upon securing a policy. It's vital to ensure that all details are accurate and up to date. So when you get it, go over every line. Make sure that's what's supposed to be there. Because after the fact, they'll even use a piece of paper. I don't care what policy you got. They'll try to destroy anything they can before they want to pay out. Okay, this is going to be the CLI. I'm not really going to go over this in depth because this is something because they're all laid out, but they all got the same information. This one, you can see that it's got the policy number labeled. Also, it's got the coverage limits. Coverage limits for this one for general liability is $1 million. Auto liability is $1 million. That's usually what they can get them at 750,000, but they're usually going to ask for $1 million. 250,000 for the cargo insurance on this particular example. Remember, all this has to be there. So it'll say the effective dates, right? So you got effective date, expiration date. You got the name of the insured. Make sure it's the right policy on there, the right company name, if it's LLC, whatever it might be, because they can't use one if they're with you. They can't use one from a previous carrier. That doesn't validate it, right? Because they're going to be under your MC. Unless they got their own MC, then that's a different thing. They're just using you for dispatching. Cancellation clause and additional insured. So make sure all these are filled out for this to be an effective policy and the right dates and stuff. All right, with the CLI, the importance of a valid certificate of liability insurance. A valid CLI is vital to for several reasons. Building trust. Clients are more likely to engage with dispatchers who can provide proof of insurance. A valid CLI assures clients that the dispatcher is professional and responsible. Compliance and regulations. Many states and industries have a specific insurance requirements. A CLI ensures compliance, allowing dispatchers to operate legally without interruptions. Facilitating business operations. Have a valid CLI Having a valid CLI streamlines operations, allowing dispatchers to secure loads without delays or complications stemming from insurance verification. You definitely want this because, I mean, you got to have it, but you need to know if you're a dispatcher for a particular carrier, right? Make sure he has the correct insurance. Make sure everything's there. He'll say, yeah, I've got it, and he probably does have it. But to cover your bases is the best way to facilitate this, to make sure that as you start working with him, nothing like starting working with somebody and the tools are not there. And the insurance is one of the main tools that everybody looks at. But anyways, make sure you check everything out. Make sure you got all the correct documents in hand so you can move forward, get freight on that truck, and start making money. Okay, the pros and cons of the Certificate of Liability Insurance. The pros is going to protect you against claims. It covers legal costs and settlements related to claims, offering financial protection. Enhances credibility. A valid CLI demonstrates professional and financial responsibility to clients and partners. Client assurance provides peace of mind to clients, knowing that they are protected against unforeseen circumstances. The cons is the insurance costs quite a bit. In order for you to get a smaller, I mean, in order for you to get less, better insurance, then especially like if you got equipment, you got to do those policies like for a whole year. It saves you about $3,000, $4,000. But anyways, complexity, understand the nuances of your policy details. You definitely gonna want to know that one. Potential gaps in coverage, that right there, a misleading policy, that could cost you big time. So make sure that you go in with a legitimate agency. Look for reviews, look for other things to find out besides just taking somebody's word that, yeah, they got you covered. And obviously where you're going to find this is going to be with the agency in the marketplaces. They'll give you all the policy information, which is by law is required. But remember, you got to read it and understand it. All right, best practice for managing a CLI. Effective management of your CLI is crucial for seamless operations. Here are some best practices. Regular updates. What do? Review and update your CLI regularly to ensure it reflects current coverage and limits. Where to find that information, then again, you got to go to the policy, okay? Keep copies accessible. Always keep them accessible because you're going to need those numbers and everything. Put them in your phone, put them in your whatever, as far as, if you're um, you have the MC and everything. Store documents like in a secure cloud service or physical filing, the same thing. Communicate with your insurer. What do? Stay in contact with your insurance provider to understand coverage options and updates. Then again, it's that same thing. Where to find it? Best thing is to go to that insurance agent. They're always going to keep you up to date if you ask for the right information. Review cancellation clauses. Be careful about this right here. Understand cancellation terms to avoid lapses. So that lapse, that means a gap in the coverage. So what if the policy has a particular setup, because all of them are different, right? And these insurance companies, they're doing business. I don't care what you think their goodwill is, because you're paying for that goodwill, but make sure you don't lapse your policies. You can give you a hard time between that same insurance provider, or if you try to transfer to somebody else. So make sure you cover these points. All right, so this one right here, like I said, right here at the top one, liability insurance. I did this scenario for a pretty about $379. So you'll need a bunch of different insurances, right? And this is obviously still the same. So it does liability insurance, cargo insurance, physical damage insurance, uninsured or underinsured motorist, bobtail insurance, general liability insurance, workman's compensation insurance, and reefer breakdown insurance. This is the reason I put this one in it. This is one of the few that is always going to have a different policy because of the reefer breaking down, and this is in case it does break down, okay? So this coverage protects against losses resulting from a breakdown of the refrigerated unit, which could lead to spoilage of cargo, which ends up being a refusal of the load. Now you got you an OS&D claim. So the specific requirements can vary based on the operation, the state you're operating in, and any contracts you may have with clients. Always consult with your insurance provider to tailor your coverage to your specific needs. So just keep that in mind. But anyways, this is going to be the last page on it of what we got going. So this chapter here was designed to get you an understanding of insurance, what it's going to look like, what is involved in it. I've got I think put 5 or 6 videos on the different aspects of insurance. It's not that you've got to be an insurance professional, but you need to know what you need to get from the carriers or the owner operators, so you can make sure that they got the right coverage for what you're doing based on the type of trailer you got, based on the kind of freight that you're going to be looking for. And when you're doing your deals with the brokers, right, they're going to look at that too. They got to make sure you got the right amount of coverage. So if you're set up with them, that means you're already covered. They know what kind of insurance you got, and it's good to go. You don't have to do this every single time. But anyways, you got any questions or anything, please let me know, and let's get on to that next chapter.